The name itself is synonymous with industrial might, a true bellwether for the entire global economy. And in its 100th year of operation, it just dropped its Q4 and full year 2025 earnings report. Now, the headlines are all screaming about record sales, and sure, that's part of the story. But we're not here for headlines. We are here to stress test the foundation. Is this industrial giant really built to last for another century? Or are we starting to see some serious cracks appear in that facade? Let's put it to the test.
Welcome to Iron Financial. Our mission here is simple. We help you forge a stronger portfolio. And we do that by cutting straight through the market noise, by stress testing the balance sheets, and by analyzing what actually matters to your bottom line. We do the deep dive on these earnings reports so you don't have to. Today, the legendary Caterpillar is in the crucible. So let's get right to work.
Okay, let's start with the big, shiny number that has everyone talking. $67.6 billion. Let that sink in. That is the highest full-year sales and revenue figure in Caterpillar's entire 100-year history. I mean, that is just a staggering number. This is the kind of top-line figure that builds market confidence, that screams strength, that says, we dominate our market. On the surface, this looks like an absolute beast of a performance, no question about it.
Ooh, hold on a minute. $67 billion is a massive number. You're right, it's impressive. But revenue, at the end of the day, is just one part of the story. You know the old saying, right? Revenue is vanity, profit is sanity. If you're out there selling more equipment than ever before, but you're actually making less money on each and every sale, well, you've got a serious problem brewing just under the surface. So the real question, the one that every investor should be asking, is this. While that top line is hitting all-time records, what in the world is happening on the bottom line? Where is the actual profit for the people who own the stock?
Exactly. And that is the central question we are going to answer today with the full Iron Financial stress test. Here's the game plan. We're going to start with the Titan's overall report card. Then we'll build the bull case focusing on its raw power. After that, we'll flip the script and stress test for cracks in the armor in the bear case. We'll go deep inside the engine room to look at the individual segments, we'll inspect the financial foundation, and finally, we'll deliver our verdict. Is this an opportunity or is it a trap?
All right, so let's get into that report card. You know, at a quick glance, Caterpillar's numbers, they really do look like a home run. I mean, record revenue, you can't argue with that. But the minute you look just a little bit closer, you start to see these deeply conflicting signals. It's kind of like hearing a really powerful, high-performance engine, but it's making some unhealthy grinding noises. Every single investor needs to understand these contradictions before making a move.
And this table just perfectly illustrates that core conflict. I mean, just look at this data. Full-year sales and revenues up a very solid 4% to that record $67.6 billion. That's the bull story right there in a nutshell. But then you look at the next two lines. Profit per share, that's the number that investors actually get to keep, has fallen by almost 15%. It's gone from over $22 a share down to $18.81. And the operating margin, which is the purest measure of a company's core profitability, it's just been crushed. It has dropped by 370 basis points. That's 3.7 full percentage points from over 20% down to 16.5. So think about that. Record sales, but shrinking profits. This is the central puzzle we have to solve in this earnings report. Okay, to really understand that puzzle, we've got to examine both sides of the coin fairly. So first, let's build the strongest possible bull case for Caterpillar. We can't just dismiss the positives here, because frankly, there are some incredibly powerful numbers in this report. Numbers that show the raw, undeniable operational strength of this company. This is the argument for why the market initially gave a thumbs up and pushed the stock higher on this news. First off, the momentum this company has heading into the new year is just formidable. In the fourth quarter alone, they brought in $19.1 billion. Now, that's not just a record for a fourth quarter. That's a record for any quarter in the company's 100-year history. And it represents a massive 18% year-over-year increase. We're not talking about slow, plodding growth here. This is a huge acceleration in demand and sales execution right at the end of the year. It shows the company's absolutely firing on all cylinders when it comes to just moving machinery off the lots. And here's the kicker. It wasn't just that the numbers were big, they were way bigger than anyone on Wall Street was expecting. The consensus estimate, the average guess from all the experts, was for revenue of around $17.85 billion. Caterpillar blew past that by more than $1 billion. Analysts were expecting an adjusted earnings per share of $4.70. Caterpillar delivered $5.16. This isn't just about meeting expectations. This is shattering them. It shows that the so-called experts on Wall Street fundamentally misunderstood just how much raw power Caterpillar really had in that quarter.
And this is absolutely crucial. This revenue isn't just some accounting entry on a spreadsheet. It is translating into cold, hard cash. The company generated a massive $11.7 billion in enterprise operating cash flow for the full year. You've heard us say it before, cash flow is the lifeblood of any company. This is real money flowing into the business that they can use for new investments, for paying down debt, and, most critically for us as investors, for shareholder returns. This isn't just paper profit. We're talking about a mountain of cash.
And you better believe they are putting that cash to work for their shareholders. Look at this. Almost $8 billion returned directly to investors in 2025 alone. You've got over $5 billion in share buybacks, which, as you know, reduces the number of shares out there and boosts the earnings per share for everyone else. And on top of that, another $2.7 billion in straight cash dividend payments. This is a huge vote of confidence from the management team. You simply do not deploy this kind of capital unless you are supremely confident in the durability of your cash flow and your future business prospects. It sends a very powerful signal to the market.
And to really put a cap on this bull case, let's look at the words of the CEO, Joe Creed himself. He highlights the record sales, of course, but the most important phrase in this entire quote is record backlog. Now, a backlog is the book of future orders, equipment that's already been sold but hasn't been built or delivered yet. A record backlog means they have tremendous visibility into their future revenue streams. This proves it's not just a one-quarter wonder. They are walking into 2026 with a pipeline that is already full to the brim, and that's what gives them the strong momentum he's talking about. That is a very, very strong foundation.
Okay, that is a powerful bull case. I'll give you that. Record revenue, huge cash flow, they're rewarding shareholders, and they have a massive backlog. It's compelling stuff. But a structure is only ever as strong as its weakest point, right? A powerful engine is totally useless if the chassis it's sitting on is cracked and about to fall apart. So now it's time to do what we do best here at Iron Financial. It is time to stress test this foundation. It's time to go looking for the cracks in that yellow armor. And believe me, in this report, you don't have to look very hard to find them.
Let's start with the margins, because this is exactly where that shiny bull case starts to fall apart. In the fourth quarter of 2024, Caterpillar's operating margin was a very healthy 18%. Now, fast forward just 1 year to this supposedly record-breaking quarter we just talked about. That margin has completely collapsed to 13.9%. That is a drop of over 400 basis points. That's 4 full percentage points in a single year. That means for every single dollar of that record revenue they brought in, a much, much smaller piece is actually turning into operating profit. This is the first major structural flaw we found.
And you know, those collapsing margins lead directly to this right here. This chart just brilliantly illustrates the problem for shareholders. Despite those record full-year sales, the profit per share, the actual bottom line, has fallen dramatically. We're talking from over $22 a share in 2024 to under $19 a share in 2025. So let me ask the question again. How can a company be out there celebrating record sales when it is delivering nearly 15% less profit to its owners? That's a fundamental disconnect. They are working harder, they are selling more, but they are making less money. That is not a sustainable model for long-term value creation. It just isn't.
So what is causing this margin collapse? Well, the report actually gives us the exact numbers. In Q4 alone, Caterpillar was hit with over $1 billion in unfavorable manufacturing costs. The report explicitly says this largely reflects the impact of higher tariffs. That is a major external pressure that they are clearly struggling to manage. On top of that, they took a $282 million hit from restructuring costs, which was mainly from writing down the value of inventory in the rail division. That's an internal self-inflicted issue. When you add these up, these two factors alone completely wiped out almost all of the profit gains they should have seen from their massive increase in sales volume.
Okay, so we have a clear picture now. We've got a company with immense top-line power, but it's got some very serious profitability problems. So to really understand the true health of the company, we need to pop the hood and look at the individual parts of the engine. See, a company like this isn't a monolith. It's a collection of different business segments, and their individual performance tells the real story. So let's pop the hood and see which parts of this engine are firing and which ones are failing. And wow, what a story this table tells. This is the breakdown of profit performance in the fourth quarter for Caterpillar's 3 main business segments. Just look at this. Construction Industries, their flagship segment, profits fell 12%. Resource Industries, which covers all the big mining equipment, profits there completely collapsed by 24%. So two of the three main engines in this company are sputtering, and they're sputtering badly. All of the growth, and then some, is coming from just a single division, Power and Energy, which saw its profits surge by an incredible 25%. This is not a company that's firing on all cylinders. This is a company where one segment is doing all the heavy lifting, basically dragging the other two across the finish line.
And that one segment is incredibly strong. There's no denying it. The report highlights that power and energy sales were up 23% in the quarter alone. Now, this is being driven by massive demand for turbines and for power generation equipment. You can probably tie this to big trends like the build-out of data centers, upgrading energy infrastructure, and the global energy transition. This segment is an absolute powerhouse right now, and it's essentially papering over the significant weakness that we're seeing in their core construction and mining businesses. The big question for any investor is, can this one segment continue to grow fast enough to offset the problems everywhere else?
There is one more critical part of this company that we have to analyze, and it's a piece of the business that often gets overlooked. I'm talking about Cat Financial. This is the company's in-house financing arm. They provide the loans that allow customers to actually go out and buy all of this very expensive equipment. You should think of it as the bedrock, the stable financial foundation upon which the entire industrial business is built. The health of this division tells you a whole lot about the health of Caterpillar's actual customer base. And here, finally, the news is unequivocally good. I mean, credit where it's due. This slide shows the percentage of customers who are late on their payments. At the end of 2025, that number stood at just 1.37%, which is down from 1.56% the year before. And get this, the company's own press release calls this figure a historical low. So despite all the chatter and any concerns about the global economy, Caterpillar's customers are paying their bills on time. This signals a very healthy, high-quality loan book and a financially stable customer base. This is a very strong pillar supporting the entire company. And this just reinforces that point perfectly. Write-offs. That's the term for loans that the company has basically given up on ever collecting. It's bad debt. And that number actually fell in 2025, going from $115 million down to $101 million. So not only are fewer customers late on their payments, but the company is actually losing less money to defaults. The message here is clear. The bedrock is solid. Cat Financial is performing exceptionally well, and it's providing a crucial element of stability to the entire enterprise.
All right, it is time. We've gone through the report card, we built a bull case, we stress tested the bear case, we've looked inside the engine, and we have inspected the foundation. We have all the evidence in front of us. Now it is time to put it all on the scale and deliver the final verdict from Iron Financial. Is this industrial titan an opportunity, or is it a trap for unwary investors?
All right, let's just summarize it quickly. The bull case is all about the engine, and that engine is immensely powerful. We're talking record-breaking revenue, massive operating cash flow, and they're just crushing Wall Street expectations. They're returning billions to shareholders, their power and energy segment is on absolute fire, and their financial arm is rock solid. But the bear case points to some very serious cracks in the chassis that is supposed to be supporting that powerful engine. The margins are collapsing, the profit per share is falling significantly, those manufacturing costs driven by tariffs are just soaring out of control, and two of their three core industrial segments, construction and resources, are showing serious, undeniable profit weakness.
So here is the final verdict from Iron Financial. What we have here with Caterpillar is a company with an incredibly powerful engine that is fighting against a damaged chassis. The growth, the cash flow, the momentum, that is all real. The opportunity here is not some illusion. However, the structural problems, those collapsing margins and the costs that are eating away at the profits are equally real, and they absolutely cannot be ignored. This isn't a clear-cut buy or a clear-cut sell. It's a complex machine with some very strong parts and some very weak parts. The opportunity is definitely there for those who believe that powerful engine can outmuscle the damage to the chassis. But for us, the overall structure demands a very, very cautious inspection before you commit your capital. This is a time for diligence, not a time for hype.